Hey there, another housing market update 2023. I'm Brad Travatica, realtor in Monmouth and Ocean County. Got a lot of great information for you. I'm going to cover a lot of topics that are very important to homeowners, buyers, and sellers in central New Jersey. And I want to share my screen, get started here. Got a few slides to show you. All right, and before I get started, I found this quote that I thought was really indicative of the way that I like to provide or feed this information, right? And I found this quote from Donald Miller: "People do not follow the best leaders, all right? They follow the ones that they can understand the easiest." So I really want to kind of keep this simple and keep it pertinent to the facts that are going to affect you, so that you can make the best decisions for you and your family. Okay, and this illustration here, by the way, we're going to cover rates, where they've been, where they are, where they're going, in terms of mortgage rates and how that affects you. Inventory, one of the biggest issues in real estate in the housing market today. We're going to talk about home prices and have home prices hit rock bottom, what banks are saying, what they've said, and what they're saying now, and then a couple headlines in the media. All right. But this illustration here, I thought, does a great job in terms of illustrating where the market is right now. Last year, we were in the straightaway. We were going 250 miles an hour right down the middle of the road. All right. Pretty easy to navigate, very tough, but now we're in the turn. Okay. And now the approach is different when you work with somebody that doesn't know what's going on, doesn't know what's going to happen. They're just used to the straightaway. Um, Now I think it's time to take a step back and work with somebody that actually knows what's going to happen and knows, or at least can give you the information to facilitate a good decision for you and your family, whether that's to hold off or whether that's to move or move more aggressively and faster. All right, this information will help you make that decision. All right, so let's get started here. So where were we with mortgage rates? As you can see, this is a look back to November of 2022. And the experts believe that the peak is behind us. I think we can all say that confidently, where we were at a little over 7% in November. It has been a downward trend ever since. All right. And today, as of early February, we were at 6.09%. Will it fluctuate a little bit? Of course it will. Next month, I can expect it to fluctuate even more. All right. However, if you've followed me before, you've heard me talk about May 10th. May 10th is not going to be a significant event that day, but the experts feel like the tailwind on a deceleration of rates will begin. Okay, why is that? Well, the CPI reports come out, the Consumer Pricing Index, all right, and uh, they think that the bond market and the treasury yield and even inflation will react pretty positively towards those reports starting in May and continuing through the rest of 2023. So they expect rates to start coming down somewhere in the mid fives. Some say low fives, some say high 4%. Okay, so if that happens, how does that affect you? Well, I would say uh, two things, two examples. Let's say you had to list your home and buy a home. Okay, I would propose to you, do that now. Okay, buy before the frenzy, and it won't be a frenzy like when we saw 2% and 3%. It won't be like that, but it'll be highly competitive because it's very competitive right now. So when rates, if rates get down to 5% or even in the fours, it's going to be tough. So I would suggest listing now and buying before that high competition in the spring and summer market begin. All right, now if you have to just buy, again, do it now. If you have to buy in any situation, it would be prudent to begin the process now and lock something up. And even if you get a higher interest rate, you can refinance it down the road, but at least you get into the home that you need. Okay, so Ali Wolf said, I wonder if some consumers have worked through the 5 stages of grief of higher mortgage rates. I think, including watching these updates, consumers have just become more educated. They're starting to get used to the new norm. They've seen prices skyrocket. They've seen mortgage rates skyrocket in a very quick way. All right. And now they're starting to see the mortgage rates come down. So people are getting more and more informed. Okay. And as it relates to rates and buyer demand, you could see, like in November, there was limited buyer demand. Active inventory was staying on the market longer. There was more inventory to choose from. All right. Now, today, we see good buyer demand in that 6.5 range. All right. That is historically a very average interest rate. Okay. Now, as we start to see, like the experts are predicting, if it goes to 5.5 or even lower, we're going to see very strong demand. And if we layer in kind of where we've been since January to early February, we have been in that very good demand. Right. So before it comes too strong, you might want to think about getting into the market sooner rather than later. So let's talk about new listings and inventory. All right. We take a look back a few years, pre-pandemic levels, where we were, and compared to where we are last year. All right. Last year, we were trending in the right direction, and everybody was expecting a housing crash. Okay. And that means that in order for that to happen, it's supply and demand. Supply had to go up. So everybody was predicting it was going to crash. However, what really happened? Well, what really happened is we were worse off than we've been in previous years. All right. So we were 21% year over year lower in inventory. Okay. So home prices aren't going anywhere. All right. We need listings. We need listings in the marketplace. And by the way, if you're thinking about listing, I just developed a peace of mind pre-listing process, 7-step plan to prepare your home for sale. All right. You can go to homestretchrealestate.com/peace of mind. Homestretchrealestate.com, peace of mind. I'll try to leave a link somewhere in the post here. Okay. But this is going to give you a couple steps in terms of, personal organizers and junk removal, a couple other things to help you prepare your home for sale before I come in and sell for top dollar. Okay. But just to close out on inventory, you can see new listings are below previous years. So if you are going to get a very good price for your home still in today's market, because supply is so low and demand is still there. Okay, so Mike Simonson, the CEO of Altos Research, said, I'm looking at the latest housing data and I see surprising demand indicators, including home price resiliency, meaning home prices aren't going anywhere, right? And supply staying restricted. Who would have guessed? Okay. All right. So what are banks saying? How about the banks? That some of the banks have projected such depreciation going back at the end of 2022 and now in January of 2023. Okay, and they're seeing this supply and demand issue or balancing out. And Goldman Sachs, right? They were projecting 6.1% depreciation in home prices. As of January 24th, they changed their forecast to 2.6% depreciation. All right. So I would keep an eye on that, and I will do that for you. And when these experts and these banks reproject their housing forecast, I'm going to bring that to you. Okay. But that's very interesting, something to keep an eye on. And I talked about, have home prices hit rock bottom? Well, here's 4 of the major indices that experts follow: Case-Shiller, FHFA, Black Knight, CoreLogic. All right. And this is 2022. Okay, you see appreciation, slight appreciation from January to June. And then if you hone in on the fall months, August and September, August, we hit the bottom. And since then, appreciation has begun again. We don't have December's data, but appreciation has started. So I think the rock bottom in home prices based on supply and demand was in the fall. Okay. So let's turn over to our last topic here, headlines. All right. The headlines, you turn on the news, they do more to terrify than clarify. 67% of Americans say that a housing market crash is imminent in the next 3 years. Okay. Right. You look at the headlines out there. U.S. foreclosure filings surged 115%. Foreclosure activity doubles annually, but still below pre-pandemic levels. Foreclosure filings rose 115%. Well, guess what? These are all true. They're all true. However, they don't provide the full context. I think they're there to get clicks and instill some fear, right? They want you to click in and read their articles. All right. But if you actually believe this, okay, that might stall your plans to move forward with what you want to do with you and your family and your dreams. Okay. So Adam, very respected curator of data, they say that nationwide for land and property data today, they released their year-end 2022 foreclosure market report, which shows foreclosure filings, default notices, scheduled auctions, bank repossessions, and they were reported on 324,000 or so U.S. properties in 2022, up 115% from 2021. That's the headlines, right? Okay, but they were down 34% from 2019, before the pandemic shook up the market. Foreclosure filings in 2022 were also down 89% from a peak of 2.9 million in 2010. Okay, so let's add some context into that, and let's take a more holistic look at that. Okay, because keep in mind, inventory is an issue. There's three ways that houses come on the market. Okay, that is distressed sales, which we're looking at, new builds, new construction. Now, builders are not out there building right now. All right, new construction is down in the U.S. altogether. And the third way is existing home sales. But with interest rates so low, people aren't planning that move because they want to hold on to that 2 and 3% interest rate. Okay, so here's distressed sales. Foreclosures are still significantly below where they were during the bubble. Okay, a little bit under 600,000 pre-pandemic. Okay, we're still short of that by several 100,000. Unfortunate for a lot of these families, but even if you follow the trend down, if the 2020 and 21 never happened, we're still about right where we were trending, and that's because lending standards have been much tighter over the years. Okay, this is not like the bubble of 2008. This is not a bubble at all. This is the way it is. Okay, so Rick Sharga, to close out here, Executive VP of Adam, said 18 months after the end of the government's foreclosure moratorium, and with less than 5% of the 8.4 million borrowers, okay, who entered the CARES Act forbearance program, so there's only 5% of them remaining, foreclosure activity still remains significantly lower than it was prior to the COVID-19 pandemic. It seems clear that the government and mortgage industry efforts during the pandemic, coupled with a strong economy, have helped prevent millions of unnecessary foreclosures. And Bill McBride, who forecasted the 08 collapse, said the bottom line is there will be an increase in foreclosures over the next year, but from record lows. Okay, there will not be a huge wave of distressed sales as happened following the housing bubble. The distressed sales during the housing bust led to cascading price declines, and that will not happen this time. Okay, so again, if you're thinking about listing, go check out homestretchrealestate.com/peace-of-mind. All right, I got great information for you there. I hope you enjoyed this housing market update. Those are the facts. Okay, those are the facts. And I hope these strategies help you and your family out. If I could help you plan that out, give me a call, shoot me a message. I'm here to help anytime. Have a great day.